The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good, Billy Ray, feeling good, Lewis. We're going to have a new guest today at 9:30 from Alpha Insights. Jeff Hughes out of Minneapolis, Minnesota will be our guest, and he has really some incredibly beautiful charts that I think you're really going to like. The first chart we're going to look at, of course, is the German DAX. As you can see here, that it's just completing an ABCD pattern. It should be major support. Going below those lows would not be a good sign in the German DAX. We see the same thing if we take a look at the FTSE. We're seeing the same type of move, ABCD type pattern, and that's another one that's very, very important. And then also, lastly, we want to take a look at what happened here. Oh, before we do that, we have to share you the latest fashions coming out of South Beach, Florida, folks. You're going to love this one. This is the new thing they call the trikini. Can you believe that? All right, listen, I want to change gears just a little bit because this is an anniversary date, very big. Let me show you this one, folks. You might not remember this, but way back on May 18th, which is Monday, and I'm not going to be here on Monday. I'm sorry, this is old doctor time of the year. I've got to go in for the usual physical stuff, and they're back working, so I've got to go in Monday for early tests, so I won't be able to be here on Monday. But anyway, this is the Mount St. Helens eruption, as you can see here. This was May the 18th of 1980. Why I'm bringing this to your attention is because what was happening, we were watching the volcano getting ready to blow at any time. And I was at Drexel. This was long past the gold had topped, which was January of 1980. And what I had a position on in long soybeans, because we were looking for this thing, if it blew, that it would possibly affect the soybean crop for the year. And I was still working with Dave Nelson and Oscar McClure. And, this was a move that was pretty nice, but it was this picture, when I saw it, just literally brought chills to me. So I wanted to bring it to your attention. The reason why is because the cloud cover would affect the weather, and that's exactly what happened. It wasn't a big move like we thought, but it was still pretty big. It was pretty exciting anyway to see it happen. I just wanted to bring it to your attention because of the fact that that's when it happened, and I had memories about it. So I think that's something that we ought to think about. All right, let's take a look here at what happened yesterday in the E-mini S&P. Oh, before we do that, we got to take care of business here, boys and girls. And this is where we are. You're going to see here. This is the gold market. Let's get this up here. We've been talking about this. And this is where you want to be taking profits in gold. I don't know if it's a double top or not, but nobody else does either. You could put your stop, use a trailing stop at, this is what I live by. And if you can't do this one, you can't do any of them. If it breaks out a new high ground and we get above 1,800, I'll change the strategy and start looking for, smaller retracements to buy. But, this is a nice move here. We went long at 1711 and it's up at 62. So this is the time to get out. And, I'm just looking at ABCDs, folks. I don't know diddly squat about the fundamentals, and I don't think anybody else does either, if you want to know the truth. Let's take a quick look here at the silver market. We're seeing the same thing. We're seeing this nice ABCD pattern happening in silver, right up there at that just about the $17 level. We're almost there right now, so we are getting a move. And remember now, this is nothing's happening crazy in the stock market, so the gold and silver are acting differently. Platinum looks absolutely horrible. I don't know if it's moved today or not, but it hasn't even moved at all. So there's not much action happening, in the platinum market. Now, yesterday was interesting because if you remember, we were here, we were saying that the importance of that 2750 level was very, very important. And this is why. If you'll notice the ABCD pattern that we had here on Monday, which was the 11th, we were up at 2940. It's perfect ABCD. And then we come down and we make an ABCD. You'll see that there's double ABCDs there at that 1.618 level, which was 2752, but we only got to 2760, I believe. I think we got the 2760 was the low. Now, if you follow my work, you'll notice that I do have a secret oscillator there, that when you get within about a few points of the actual low and it doesn't get there, that's the ideal point to go long. And that secret oscillator I'm going to share with everybody that subscribes to the daily day trading thing that I'm going to do on the 21st. And if you believe in the secret oscillator, folks, I still have 2 shares of the Brooklyn Bridge. That just means that you're getting close, folks. No one can tell you what that exact price is going to be. The only thing you can do is let the market give you feedback. Well, you get to 2960, 27, gosh darn, 2790. 2760, and it doesn't turn up. I mean, it stops going down. As soon as it's gone 10 points, above that, you have to start thinking, maybe this thing has already made a bottom, and that's exactly what had happened. The Dow went from minus 450 all the way up to plus 300. And here's what the Dow was doing. This is the same pattern that we're looking at in the Dow. Now watch. You see, the Dow Jones made that little puppy. It went down and hit the right number, and the other one didn't. So we had that big rally, and now we're having a little bit of a sell-off. The rally that we went to last night, yesterday on the close, was exactly a 50% retracement of the high on the 11th, and it was a 38% retracement of the high on the 1st. That's why you'd be expecting the market to be coming down, and that's exactly what is happening so far today. I don't know if it's going to continue happening, but nobody else does either. So that's another thing that we want to look at. So those are the main things that are happening, from a strategic point of view from these markets. So I think that's something that, these are technical things, of course, but when they do happen the way they do with perfect numbers, it really makes a difference, at least from my perspective. Now, we're going to take a look here at one other thing, and that is the crude oil. If you remember in the crude oil yesterday, we were looking for that 3 drive to a top pattern there at the 2680 level, and we got that, and then we came down for 2 hours, stopping exactly at the 50% retracement of the low that we made on the 13th. And from then on, the market started to go higher, and that's it. Okay, Mr. Z is telling us today is the 5-year anniversary, 5/15/2015. The S&P had a high of 2134, and it was lunar perigee on top of the SPX for the year. 5, of course, is a Fibonacci number. Yes, and so there is a lot of things happening, but I don't think, let me check and see here, we don't have we've already passed the full moon thing. That was way back on the 7th, so we don't have any, I don't think we have perigee or anything like that. I don't think so, Mr. Z, but I will double check. 877-927-6648.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today. Larry Pesavento is hosting a special event Thursday, May 21st from 9 a.m. until 4 p.m. Eastern Time. Trade What You See, a live trading event. For the first time in over 10 years, Larry will host a live event where you'll watch over his shoulder as he trades the markets live. You'll see how he organizes his trading day, the times most likely to generate a signal, what outside information he ignores, and more importantly, what he does not ignore, and much more. Larry will trade the markets in real time, including the Euro US dollar, pound dollar, dollar yen, the Dow, and E-mini S&P, crude oil, gold, treasury bonds, wheat, and soybeans, and more. When you sign up, you get a month of his daily newsletter, Fibonacci 24/7 included. For all the details on Larry Pesavento's live trading event on Thursday, May 21st, and to sign up today, visit the front page of TFNN.com.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, I posted the chart of that long-term chart of Bitcoin. It's a monthly chart going back to 2012. And basically, I wanted to point out that those halving events that occurred in 2012, you notice the other blue box, 2016, and we had one on May 11th. The reason why I'm bringing this up to your attention is because of the action that we're seeing in Bitcoin. This is all chart-related, folks. It has I don't know anything about the fundamentals, but just take a look at this chart on Bitcoin. This is actually a pretty bullish chart. You'll notice we made the 3 drive to a bottom pattern from August, December, and into March. That's 618 is a perfect 618, perfect 1.27, and then we rally up to 10,000, and we back off. Over a period of about 6 or 7 days, we get all the way down to 8,000, and look what we've done already, folks. We're ready to go blasting off to the upside. Now, this might be related to the gold, I don't know, but that low that we made there at 8,100 is a 382 retracement of the low that we made back in March. That's flat out bullish. So this could be a very, very interesting thing to see what's going on here. So I think it's quite important to watch this. I mean, even if you don't have an interest in it, you should pay attention to it because it could be something that we have to go through in the future. Look, there's 5,100 firms out there that are trying to find the answer to this thing, and only 5 or 6 or so are going to make it. So those are the ones that you're going to be looking at. This is similar with starting with the internet. Which one did you pick? Did you pick WorldCom, or did you pick Global Crossing, or did you pick AOL, or did you pick Google, something like that? So we'll see. Okay, Mr. Z is asking, I am not trading Bitcoin futures at all. I have not put an order in or not. I'm going to be doing it. Actually, I'm doing my first one today. But this is, I'm not doing anything at the Merc, trading those futures or anything like that. I'm sure that they'll be looking pretty good once they move, and I'll start following them a little bit closer. But no, I don't. I'm not doing anything like that, Mr. Z. But I'm watching it. But today's the day. Okay, let's move on here and cover one other thing that we did, and then I'm gonna stop dropping in trades here in the early morning here like this, because it's not fair to the 24/7 people. They get some other trades and stuff, but those are just a few things. I wanted to show you a trade that we were looking at yesterday that is just not working, and I'll show you the answer to this. This is the British pound, and it looked like it was going to be what was the Bitcoin American symbol? That was. Paul is asking what was the Bitcoin American symbol? No, that ADA is Cardano. That's the name of that one. That only sells for a nickel a share, so you get that at a cheap price. Anyway, look at the British pound here, folks. We've broken below the 382 level. We could only get to 2240. I tried to get out of it as close to break even as I could, but the market was breaking, so I think we ended up taking a 10-pip loss in that. But when that 382 stays there for 2 days like that, there's something wrong, because when you hit a 382, you usually, just like you saw in the Bitcoin, when you hit those 382 numbers, boy, that's telling you that there's a lot of really good things happening. So pay attention to that. So anyway, that's another one that we're watching. Hold on, we've got another question coming in from somebody, and we'll move on to the next one. Remember, in this cryptocurrency market, which is really related to the blockchain stuff, the two big daddy rabbits are Bitcoin and Ethereum. They cover about 80% or more. I think it's 85% of the whole market. So what I'm looking at are these little coins that are, skimming along the water, so to speak, and they're only selling for 20, 30, 40 cents. So your downside is rather limited. And if you get lucky, and sometimes you do, that's the main thing to keep in mind as we look at it today. Okay, we've got another 4 or 5 minutes here. One of the questions is also about the U.S. dollar index, folks. We are in a very, very, hold on, let's get this up here so we can show the folks what we're looking at. The dollar index is going to have a pretty good move here quickly. I don't know when it's going to start, but let's get up here and we'll take a quick look at it. And this is really this is going to be really contra to normal thinking, folks. If the dollar breaks out to the upside here above that 101 level, and we really have to do that for the breakout to occur. The reason why I'm saying that is because the Federal Reserve and the U.S. Treasury have joined together, and they have decided that it doesn't make any difference what is going to happen in the economy. They are going to pump however many trillions of dollars that it's going to take to get in there. Now, if that happens, this is going to be incredibly bearish long term, and the reason for that is it's going to mean hyperinflation, because you're going to have too many dollars chasing too few goods, and we are going to be looking at some commodity markets that are going to go probably crazy, and maybe gold's going to be the first one to do it. I had to make a decision today on this possible double top up in here, and I trade these patterns because I've lived and died by them for 45 years, so I gotta keep doing the same thing. Otherwise, I'll probably get into a little bit of trouble. I'm actually not smart enough to understand the fundamentals and all the BS that they try to feed us on the news, and that's really what I'm trying to do. So that's it. We've got a lot of chatter going in here about the Bitcoin and stuff, and there's several. We have several coins that you can look at, I think, at the New York Stock Exchange if you wanted to follow them, but we'll see what's going on. And a lot of news today about China and the trade war. I realize that. That's an amazing thing to see if this is going to happen. And we could be, in this thing with the Bitcoin and the coronavirus has now could be backpedaling the trade deal. So there's a lot of things that are happening, folks, like never before. And now with the economy starting to perk up just a little bit. We're opening here today in Tucson. We have the restaurants are opening with social distancing, of course, wearing the masks, and so far we haven't seen anything any different. The traffic is getting a little heavier, but not much else is really happening. The medical facilities are all opening today, and for the stuff that has been passing along without doing anything, the elective surgeries and stuff. Duffy's asking, well, yes, I will go to a restaurant, and I have no problem with that. I'm in the category, I'm at the 8th furlong, boys and girls, so, I have to be careful, but my health is in relatively good shape. That's why I go into the doctor twice a year to get my physicals and stuff, and my doctor, who's 20 years younger than me, said, I wish I had your statistics, but, that's it. That's it. The only thing is that my weight passed up my IQ about 140 points ago, 140 pounds ago, so I'm a little worried about that, but that's nothing new. Okay. We got Jeff Hughes is going to be back here. Alpha Insights. I think you're going to really like these charts that he has, folks. So hopefully we'll have him on the line, and we'll be able to answer some questions for him. He's a really smart guy. Alpha Insights. So we'll be back in just a few minutes. So stay tuned.
Larry Pesavento watches the markets 24/7, and now is a great time to try out his daily trading service, Fibonacci 24/7. Larry publishes videos and charts for subscribers throughout the week when warranted, and every weekend he puts out a thorough report covering worldwide markets, futures, commodities, and currencies with Fibonacci retracement levels, possible trading setups and zones, and stops and targets for all recommendations included. Larry applies the principles he's developed over decades of trading while analyzing a variety of markets for subscribers. To see for yourself the types of videos, charts, and analysis that Larry provides for his subscribers, sign up for Fibonacci 24/7 today by visiting the front page of TFNN.com under the newsletter tab. You'll also gain instant access to Larry's archived subscriber webinar from earlier this year. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today. If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we want to welcome Jeff Hughes on the line here from Minneapolis, Minnesota. Jeff, how are you?
Good morning, Larry. I'm fine. Thanks so much for having me today.
Oh, it's my pleasure. And I want to tell you something, my friend. When you sent me these charts, when I got to chart 2, I actually had goosebumps when I saw that Benner cycle from Sam Benner, the old Ohio farmer. I did a lot of work on that many, many years ago. But why don't you go ahead and show the folks what you're doing here and tell us what give us a little description of what you're doing. And these charts are terrific. So please go right ahead.
Well, sure. So just a little bit about me. I've been in the business about 30 years. I began my career in 1990 on the sell side. Predominantly, I worked in equity capital markets for a number of large kind of bulge bracket investment banks on equity sales and trading desks. And around, 25 years into my career, one of my clients called me up and said, "Hey, we'd like you to come over and help us run some money." So I guess he respected my work enough to bring me onto the buy side. But my work is largely steeped in technical analysis and global macro strategy. And so I've spent, a number of years working with some relatively esteemed technicians. My years at Merrill Lynch gave me great access to Bob Farrell, one of the great technical minds. I worked for years at Smith Barney and Citigroup, where Alan Shaw and Luis Yamada had a lot of influence on me. And so, I kind of took a lot of that initial kind of influence into the ideas of technical analysis and kind of developed it further. I went on to get my chartered market technician designation some years ago. And while I was on the buy side, I worked for a man by the name of Steve Leuthold. And Steve and I ran a global macro hedge fund together. And Steve was actually the guy who introduced the Benner cycle to me. And I have watched with amazement as how this cycle has, clocked the peaks and troughs of the market over the years. So, we will talk about that. It's definitely interesting. But, that's pretty much what I've been doing. And so a couple of years ago, we shut down the hedge fund. And I went off on my own and semi-retired. I launched my own family office, and I had been doing a lot of trading, and former clients and colleagues were calling me up left and right, asking me, what did I think of the market? How did I view this? How did I view that? And, what trades was I putting on? And so I started publishing again. I published for 15 years on the sell side and took a little bit of a hiatus when I was on the buy side. And I went back to publishing about roughly 2 years ago. And so, we've got a regular publication called Alpha Insights. Alpha Insights is really designed to help professional investors with their stock picking. And, we try and highlight relative strength opportunities in sectors and industries and individual equities for S&P 500 institutional investors. But in addition to that, we cover all global markets, so about 15 different non-U.S. equity markets, about 10 developed and 5 emerging. And then we do perspectives on the macro economy and the market in general. And so, I've got a lot of different tools in my toolbox that I incorporate into that whole process to, attempt to come up with, a view that is workable, that we can kind of use as a blueprint for everything else that we do. And so that's really what underlies all the work that I produce.
Wow, I recognize every name you mentioned in there. Did you ever run across Arch Crawford during your time at Merrill Lynch? Because he worked with Bob Farrell. He worked with Farrell for quite a while before he went out on his own.
He did. He was a little before my time. I think he maybe retired from Merrill and went off on his own in the 70s and launched his own firm. But I'm fully aware of Arch. In fact, I've met him before, and I was a subscriber to his newsletter for years, maybe back in the early 2000s. He really helped me understand quite a bit about cycles, and one of the models that I'll talk about in my chart deck is the Bradley model, and that's something that Arch actually brought to my attention many years ago.
Good. Well, why don't we start off with the first chart, which is the transportation chart?
That's right. I call this the economic cycle model. My days at the Lutholm Group were largely oriented around testing different scenarios and indexes, and we tested quite a few, different types of indexes to try and find the strongest correlation to the U.S. Economy. And, Charles Dow did all the heavy lifting for us many, many years ago when he identified the transportation index as confirming economic activity. And we're unable to identify anything that had a more powerful correlation and predictive value for economic activity than the transportation index. And of course, it's quite a bit different today than it was back in Charles Dow's day. But nevertheless, the chart that I present to you is a 25-year monthly chart with, there's quite a bit going on here that we've been able to identify. Two different harmonics of cyclical activity stand out to us, which really, the shorter-term harmonic is a 7.3-year cycle, and the larger degree harmonic is a 14.6-year cycle. Based on our work, we've really narrowed it down to a cyclical and structural sort of market activity here. And most recently, we've become convinced that the structural or secular environment has peaked and has rolled over. The lower panel of the chart actually indicates momentum. And momentum is really what we're most interested in because it offers the most predictive value about the future. And what we're seeing right now is a momentum study that is deeply negative. And this study actually peaked back in late 2014. And we saw as the index itself was making new highs in 2017, 2018, we were getting, consecutive larger degree and smaller degree negative divergences in that momentum, which gave us a lot of pause for concern. And, since probably last July, I've been highlighting this chart in my work saying, let's keep an eye on this because if we do get a break in the momentum study, it would be indicative of a much deeper and concerning economic backdrop. And if you take a look at kind of the middle of the chart, we show that, we've seen cycle tops that have resulted in recessions both in 2002 and again in 2008, 2009. In around 2015-16, we saw a mid-cycle slowdown. And that's what really kind of gave us the idea that, well, this is maybe a larger degree cycle that's developing here. And when I actually looked at this relative to the Benner cycle, and if you want to flip forward to the next chart, you can see that this cycle dates all the way back to 1783.
Hey, Jeff, we've got to pay a few bills. Could you stay with us for the next segment, please?
Absolutely.
We'll be right back, folks.
Larry Pesavento is hosting a special event Thursday, May 21st from 9 a.m. until 4 p.m. Eastern Time. Trade What You See, a live trading event. For the first time in over 10 years, Larry will host a live event where you'll watch over his shoulder as he trades the markets live. You'll see how he organizes his trading day, the times most likely to generate a signal, what outside information he ignores, and more importantly, what he does not ignore, and much more. Larry will trade the markets in real time, including the Euro-US dollar, pound dollar, dollar yen, the Dow, and E-mini S&P, crude oil, gold, treasury bonds, wheat, and soybeans, and more. When you sign up, you get a month of his daily newsletter, Fibonacci 24/7 included. For all the details on Larry Pesavento's live trading event on Thursday, May 21st, and to sign up today, visit the front page of TFNN.com.
The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The Gold Report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, JDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Trading Hour with Tom and Tommy O'Brien. Next.
Okay, folks, we're going to continue now with Jeff Hughes. These charts are spectacular, my friends, so please continue.
Well, so we're talking about the economic cycle, and, as we see it, it's actually not scheduled to bottom until about 2023. And if, in fact, it does bottom in 2023, we've just drawn a trend line off the lows of past cycle bottoms in the transportation index. And if we bottomed around that time frame as the cycle indicates, it would bring the transportations down into around the mid-4,000s, somewhere around, say, 4,300, which would be around, roughly half of where they're at today. So there's a lot of downside. The second chart that I sent you was the Benner cycle, which we mentioned. And I think that 2023 is an interesting date because it lines up perfectly with the Benner cycle, which was actually, it peaked in 99, it bottomed in 2005, it peaked again at a minor cycle high in 2007, bottomed in 2012. It peaked in 2019. These are year ends, so it peaked just around the time the market peaked itself, and is not scheduled to bottom again until 2023, which is right in line with the larger degree and smaller degree harmonics in our economic cycle model, which is the reason I wanted to present this, because, this is an evidentiary study that goes back to 1783, and you can look back at economic periods and overlay those and see that this is a very good indicator of economic activity. So the real question is, what does this mean for the market? And the third chart I sent you is a very long-term chart of the Dow Jones Industrial Average. We call it a super cycle. Dates back to 1900, so a 120-year chart. A lot of people are confused about what's going on in the market today. The question is was this another 1987 crash that we're just going to recover from? Is this going to be a more durable bear market like the 2008, 2009 affair? Or is it something different? Well, there's an old trader's maxim that says, when in doubt, get out. I've changed that a little bit. I say, when in doubt, zoom out. Take a look at the big picture here. And what the supercycle model really states is that this entire move, dating back 120 years or beyond 120 years, frankly, is one gigantic cycle that possibly just terminated this year. and we need to correct that. And so I've overlaid on this chart what R.N. Elliott developed, his Elliott wave principle, just highlighting the peaks and troughs in 5 wave progressions at kind of superior and subordinate degrees of trend. And, the largest degree of trend is in Roman numerals. It's a 1, 2, 3, 4, 5 that, peaked in blue, right? And, in between there, you can see it advances. It's this, 1, 2, 1, 2, 1, 2, 1, 2, 3, 4, 5, 3, 4, 5, 3, 4, 5, 3, 4, 5. And now we're done. So what comes after that final 5? Well, it's 1. The entire move was one gigantic supercycle wave, and now we have to correct that with a 2. And that 2 needs to be proportionate to the rest of the cycle. So, we've put a couple trend lines on here, and this is a log scale chart. So everything's in percentage terms. And all we've really done is we've traced backwards the 82, 74, 37, 32 lows and tried to adjust, to the best, trend. And then we've also connected the 29 and 62 highs with the 87 low in kind of a fainter degree trend. And it comes in below, but the point is there's a lot of downside because we can actually draw a horizontal line that connects the lows from 2009 intersecting with those other ascending trend lines, and it brings us down into a zone in the mid-6,000s on the Dow. Well, we closed yesterday at 23,625, so that's a lot of real estate to correct for. And if, in fact, we do run into a serious economic depression, I don't think there's any question that we're in a recession right now. The economists, I think, are in ubiquitous agreement that the data supports the idea that we're in a recession. Is the recession going to be a brief, sharp recession? Is it going to be a prolonged recession? Or is this going to metastasize into something significantly worse, which we would have last referred to as the Great Depression? And could it be even worse than that? Statistically speaking, I think that's a real possibility. And if we take a look at what happened back during the Great Depression, the Dow Jones Industrial Average lost about 89% of its value from its peak to trough. We just kind of, looked at the, period of time preceding the 29 high and then the 32 low. And, if we look at that objectively and then we look at what happened, say, between 1995 and present, it looks a lot like what we saw advancing into the 29 high. And the question is, are we going to see something similar between today and, say, 2023 that emulates what we saw between 1929 and 1932? I don't have an answer, and I'm not making a forecast, but I am saying that history does suggest that we need to correct this larger degree trend. And I've put together some examples, including the 29 decline, that might help us answer this question.
Okay, this is the comparative analysis chart.
That's right. So,
okay, go right ahead.
In the upper left-hand corner, that's the S&P 500 as of yesterday's close. It's a weekly bar chart. We've included a 40-week moving average in blue, same as a 200-day moving average. And we're comparing it to the NASDAQ 100 of 2000-2002, which lost 86% of its value. That is in the upper right-hand corner. We're comparing it to the Tokyo Nikkei average in the lower left-hand corner. Tokyo Nikkei lost 80-some% as well, but actually in the first phase, it only lost about 63% in the first 3 years. That extended on for another 16 years before it finally found its bottom. And then we also look at the 2932 Dow Jones affair, which again lost about 89% of its value. And what we did is we applied simple Elliott wave principle, and we marked the waves to try and say this is what happened in the past, and are we Are we doomed to repeat this in some way, shape, or form? And so, when looking at the NASDAQ 100, we had a relatively deep decline. The first wave decline, marked 1, was down 39.8%. Well, the S&P was down 35.4%, so that's very similar. The wave 2 rally in the NASDAQ 100 was up 43%.
Jeff, we got to pay a few bills, and then we'll come back and we'll talk about the short-term view if we could. Is that okay?
Okay, yeah, absolutely.
We'll be right back, folks. Alpha Insights, Jeff Hughes.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, talking with Jeff Hughes, Alpha Insights, and you're going to show us the short-term indicator that you're looking at here.
Yeah, so go ahead.
Take about just a minute or so, and then tell the folks how they can reach you, Jeff. We've only got about 2 minutes left in the show, so if you do that, and I hope you can come on again because this was really interesting for me, so I hope you can spare us some time maybe in the future. So why don't you go ahead with this chart?
Sure. So our short-term view is that the first leg down was probably wave A of an ABC corrective type pattern. We just retraced about 61.8% of the decline that began in February and ended April 23rd. And we believe that we're embarking upon a new lower low decline. So we're early into that stage. We've put in a 1-2 and possibly a second 1-2 before, we see an impulsive 5-wave decline that will take us to new lows eventually, which will probably be extended over a period of time that is much longer in duration than what we experienced in the February-March decline. One of the things that confirms this turn, in our view, is the Bradley model, which is the next chart. And that Bradley model has certain turn dates, cyclical turn dates, most recently May 11th. And we think that that probably marked the high with price. And so, the question is going forward is, where do we hide? And if we're correct about the decline in the market going forward, we've identified a bull market that we think investors should take advantage of. And we're posting this as, the description here is there's a bull market in cash. And what you're looking at is the Reuters CRB index inverted. And that inverted basically just says that, look at the value of cash relative to commodities today. It's only been higher back in 1974. And so, we believe cash is going to prove to be one of the best places to position capital in order to avoid the carnage that is to come. If you're interested in knowing more about what we do, you can check out our website, www.jwhinvestment.com.
Jeff, thank you very much, and we're going to have you back as soon as possible. God bless you, my friend, and be safe.
Thank you, Larry. Same to you. Take care.